Hi folks, it's Aidan CryptoBirb speaking. Welcome to today's Friday webinar. Best of the greetings to everybody watching that. I'm actually streaming that from Miami. This is beautiful weather, beautiful coastline here near the Harbor Islands. This is pretty awesome, meeting excellent legends. However, the market is taking a little bit of a pan down. It's correcting a little bit to the downside as a corrective weight, moving basically opposing the main narrative, the main dominant trend tendency of the market climbing, right? And well, we are going to discuss how this correction actually relate to the actual bull market that is real. If you're ready to hear this and more, make sure to stay tuned. We are going there right in a second. How's it going, everybody? Again, Adrian CryptoBirb talking to you, streaming straight from Miami. Beautiful city, beautiful people, all the legends. I had excellent pleasure meeting a couple of good local people here, also including the Bodega Club's members, incredible apes. It's funny how the things work, in here because everybody's so kindly, so friendly. And it just makes the world a better place, right? When everybody smiles, it definitely takes a better attitude to solving problems, to approaching also the market downturns, right? Because even if you approach it with a smile, you search for opportunities rather than focus on the losses, right? And avoiding, or actually not necessarily avoiding, but overcoming those obstacles, overcoming the so-called loss aversion bias, focusing too much, putting too much weight on the losses versus losing sight of the actual returns that may be hiding right around the corner is exactly what makes us hold on to losers and cut to winners. And it should be the other way around. We're going to discuss this and that shortly. Let me know in the meantime how you guys are doing. I can see Matthias Van Neskov saying first to write shorts worldwide YouTube. Wynand, that's an interesting name. Ram Saran, Hal from Suriname, beautiful. ONR, we'll have a good old season soon. Well, we'll see about that, right? Let me know, guys, where you're writing from. Let me know how you guys are feeling, what the weather is like in the place that you are at. I'm really curious about that, right? It definitely takes much bravery, takes much courage and much patience to be in the market. And if you're watching that, well, I want to congratulate you already, right? Because this is a little bit of a challenge and a little bit of a success milestone in its own reached, while most of those people, are still stuck in this bear market frames, in this bear market thinking that could be otherwise called as conservatism bias, right? Or cognitive dissonance. In fact, as the behavioral psychology, the behavioral finance would tell you, the greatest amount of cognitive dissonance, it happens at the early stage of reversal. And guess what? This is exactly what we call disbelief, right? Disbelief is this rejection of the realities, this delusion that we kind of like hide ourselves in our safety, hub, in our safe shelter, rejecting anything that just comes from outside of that, rejecting anything that just conflicts our view and our information. And we will do our best to maintain our ego defensive, right? To be basically defensive about losing ego, about admitting our losses. That's how it is. That's how it rolls. That's why we make irrational mistakes. And you're watching that. You're giving yourself a chance basically to outperform the market. You're giving yourself a chance to learn something cool, something new that can be leveraged in your favors in this market conditions. Mr. Cozy Desk, if I read that correctly, says, like your beard. I appreciate it, man. Sarah, hey, my buddy, how's it going? Long time, yeah? Miami's good. Yarek, Shema Yarek, Dublin, beautiful. Roel, Netherlands, Hong Kong, beautiful. Hong Kong people, love Hong Kong people. All the smart legends up there. Good to see you from there. Suriname, small country in South America, above Brazil on the map. Wine and beautiful. I appreciate you saying that. Listen, legends. I mean, there's so much positivity, right? But like I said, this attitude is exactly what makes us better people and what makes us better decision makers, right? Believe it or not, however, there's this incredible book written by Daniel Kahneman and behavioral economic novelist. And he wrote a couple of excellent books. One of them is called Noise, about the inconsistencies of human behavior and human judgment, right? And how it happens that by looking at one and the same price with different mood, with different times of the day, we can see different things. And it's one and the same price, right? Which tells us that basically there is noise, there is this consistency, there is certain changeability, volatility in our opinions, which is why we should not make decisions based on opinions. We should make decisions based on facts. So looking backwards is exactly what differentiates the professional traders versus looking forward, what differentiates and what is typical to novice traders, right? So think about that for a moment before we hop into the charts. So your job as a trader is to focus on the facts. The facts are on the left-hand side of the chart, right? The future is uncertain. The future is unknown. The only actually known thing is that we're going to lose. The losses are inevitable. The profits are extremely hard and difficult to create. You are playing a very asymmetric game, right? This is a very, very difficult game that you're playing, where the losses are the only bad thing that you're going to face. You have no idea about, well, when the profits are coming, right? You have no idea what's going to happen in the future. You have no idea. There's no way to predict that. What's going to happen tomorrow or the next 5 days, So being in Florida, funny thing, an anecdote, a couple of days ago, I was actually yesterday or the day before, 4:46, I think there was a national kind of like an alarm trigger, emergency alert, whatever the fuck that was. It was a test alert and everybody was basically awakened, it's 4:46. Could have you expected that to get ready? Of course not. Right? Because we don't know what's going to happen in the future. There are so many randomness. There's so much randomness, basically, in what's going on. And this makes it unpredictable. And because we are trying to have opinions instead of relying on facts, it is source of noise. It is source of biases. It is source of losses, right? This intro is a little bit of a rundown for what you're going to have in the charts, right? This exact psychology understanding, the behavioral psychology understanding, is what makes trading consistent, right? It's what makes trading consistent, and by that I mean just winning, right? Eventually, because you have no idea when the win's coming, right? You have to just wait and repeat applying one and the same good set of rules, rigid set of rules that you follow strictly and religiously, right? Such as my personal trading system, right, which is this current high time frame trailer. We backtested that many, many times. It is one of plenty of variety of indicators, of custom indicators that we use in the Burb Indicator Pro. And this is exactly what made me, basically 440K profit in like 2 trades, right? There were, of course, like some other losses, like here, just put in here, just lost here, right? However, that doesn't matter, because what matters is that if you apply that consistently, right? Something that is credible, something that is reliable, regardless of what's going on, regardless of your opinion, regardless of your mood or attitude, you're exposing yourself and giving yourself a chance to win, right? And this can take easily 6-7 figures over the time. And you can get more information, by the way, about the indicator that I use, right? With all the proof, with all the evidence, all the entries, they were all shared in my Discord, right? They were all shared here on my private trading channel. Boom, boom, all the positions, all the entries, timing, profit, 33%, and so on and so forth, right? That's what I do. Also update our trading community in. And all of those trades are public, all of this, kind of like approach in a transparent manner, right? And obviously, interestingly, I don't focus anymore on traders, on haters, on the hating side of the market. It's just interesting that whatever you say, it's just they're going to tell you that it's photoshopped, even though that all the tweets, all the pins, all the calls, were shot public, right? Those are the tweets that I actually just used and published, right? If you go link to the tweet, that's exactly what it takes you. And it takes you to the moment that I bought Bitcoin on 7th of January and so on. So long story short, this is an interesting point to make, right? Because by applying that and getting yourself a chance also to enter our free signals, you can get premium signals for free. I'm going to later give you a little bit insight on how you can get it. You can basically give yourself a chance at the very early stage of the bull market, otherwise known as disbelief. How cool is that? Okay, let's give a little bit of a rundown to what's going on in the market, right? Because crypto doesn't trade in a vacuum, right? The market, cryptocurrencies are not independent. They're not isolated. They are connected. They're intercorrelated with other markets, right? So whatever happens on one market, and imagine on the stock market or on the major averages, is going to have an impact on certain behavioral, again, attitudes or behaviors or fear or greed in the other side of the market, right? In the other markets, on the commodities or stocks, Forex, and so on, right? So crypto is interdependent on what's going on the other markets, right? So for that reason, you'll have to definitely keep the track of what's going on, right? So just a quick look on the Dow Jones Industrial, right? Dow Jones Industrial is basically kind of like moving in a good manner, right? There's a little bit of a bullish crossover here on the 20-day versus 50-day trend, right? 50-day trend is a little bit flat, following a little bit of a correction ever since the 2023 started. We are still moving in this overall frame, I should say, of some sort of like a ranging environment, right? So technically, again, it's a range of prices, even though there is an actual trend line that you could kind of like have, right? It can be conducted through a set of declining highs. What it tells you is that there may be a little bit of resistance potentially, right? There is no fixed rules in the market, so you never know whether there is for real resistance. However, you do know that people will use those different heuristics, to use those different rule of thumbs, and allocate their money according to certain frames. And apparently, this trend line can be one frame like that, right? So 34,000 points apparently for the Dow Jones Industrials is one of those points to look at. It's hovering right out above the 20-day trend. And those trend lines, those moving averages also work as frame of reference, as anchors, right? Many traders will anchor at those levels because, well, out of other luck, they will select this when given the chance, right? Because the 20-day average, the 50-day trend, the 200-day trend, they represent those classical, typical charting techniques, right, that you follow. And 20-day trend is basically representing the short-term narrative. And the medium-term trend, the blue curve, is telling you about the medium-term narrative, right? And the dominant tendency is represented by the 200-day moving average. And you can tell that it's inclining. Inclining moving average tells you that this is a bull market, because this is what it is. Inclining 200-day trend is a long-term trend, is a dominant primary tendency of the market to move consistently in one direction, right? This is consistency because 200 days of price action equally weighted, right? Because this is our arithmetical average, basically tells you that what we're looking at is credible. And if the credibility is there on the inclining 200-day trend that happens over the past couple of weeks, well, this is an early stage of the bull market according to the trend, right? This is a very interesting point. Then if we move to the S&P 500, so what we're looking at as the S&P 500 is, of course, a little bit of a similar picture, right? It's also hovering around the short-term trend and well above the medium-term trend or the long-term trend, which also inclines. So it's the same story. The large cap stocks are moving in its own bull market, even though the final confirmation should come above 4,200 points, right? We still have to take out the highs to kind of like unlock more certainty to the more hindsight, more overconfidence, and those all the trend promoting biases that will make traders buy into the trend promoting behaviors, right? Hope that makes sense. By the way, guys, if you're watching that, if you have any questions, make sure you drop them, right? In the chat, I'll do my best to actually answer some of those. And what it means, okay? What it means for you as traders is that following, again, the stock market analysis, following what's going on, let's say, on the risk on, risk off environment, right? This is something that you can apply the very best technique, the very best approach of technical analysis, and the exact reason why it works, right? And I'm talking about the relative strength and the source of momentum. Right, so the relative strength principle, the momentum principle, which is a little bit similar to the second Newtonian law of dynamics, right, is that if there is this force will dictate certain acceleration, will dictate certain movement that is going to continue until the force is taken out, right? It takes you back maybe as early as some early days of school or something. However, it does find application in real world of trading, and it's a little bit like a speeding track, right? So if you have a speeding track that it just keeps accelerating because there is this thrust force, right? You're not going to be able to stop this track with the weight of your body, right? You're not going to be able to stop this track that is having this strong momentum, this impetus, which is mass times velocity, right? So the greater the mass, that can be translated to market capitalization. The greater the track, the greater the market, right? And the greater the velocity, the harder it is to stop, which is why you would never want to oppose vertical trends, right? Because if you have a big market moving very aggressively, it's like this big truck speeding in one direction, right? And there is you kind of like trying to, just stop it with the weight of your body. So that big truck is going vertically, right? This big market is going vertically, be it Bitcoin. then yourself trying to oppose this force, right, trying to short this, basically not only fuels the rally because it provides liquidity to the buying side, it also is literally asking yourself to get run over by the spinning truck, right? So you are not able, this is so-called illusion of control, that you think that by shorting, by committing to the short side of the market, you're going to change that regime, that you're going to change something. However, there are millions of other traders with arguably much bigger size than yours, than mine, and that will make a bigger impact cumulatively, right? Hope it makes sense. So because of that, this momentum principle suggests, just like the second Newtonian law of dynamics, is that this move will continue to persist. This trend will continue to persist in one direction until the force is taken out, until the force disappears or exhausts, right? So basically, the law of momentum says that the outperforming assets, the ones that are trading better and above, outperform the other assets. The outperforming assets will continue to outperform, whereas the underperforming assets will continue to underperform, right? So by observing the relative strength ratio of XLY, which is consumer discretionary, this is cyclical stock or risk-on side of the market, versus XLP, which is consumer staples, defensive stocks, you're able to watch how the actual momentum changes, how the relative strength changes for the risk-on traders, for this risk-aggressive bullish territory, bullish tendency versus the bearish territory, right? And what we're saying is that ever since 2023 started, there was this immediate sharp incline. There was this immediate sharp twist, right? This does represent 200-day trend line, the long-term trend line of the relative strength ratio of XLY versus XLP, right? So by watching that, what it tells me is that there's been this fundamental, this strong shift, this major twist, fundamental twist that slows down the bearish tendency, and it's kind of like changed the regime. It's moving more sideways than down anymore, right? So it's not, the primary trend is not down. What it tells you is that this is not a bear market anymore, right? What it tells you is that this is much more of a sideways theme, right? Representing the equilibrium between the buying side and the selling side on the traditional finance, right? In terms of the relative strength. So you want to see, for the best of the bull market, you want to see basically the relative strength to keep climbing above the long-term trend, just like we had until 2022 started, right? So it, of course, it's a lagging indicator. It's a little bit of a lagging relative strength insight, right? However, by watching that, you're able to basically get some leverage, get some additional frame of reference, again, for how safe it is in the market to be exposed long or short on the traditional markets. And because Bitcoin is correlated with that, it gives you a little bit of deeper understanding where Bitcoin is, right? So it's a little bit of a corrective since February, strong bullish tendency, from 2023 start. So it's a major turn, medium-term correction. That's the way to look at it, right? The major term breakout is real. The trend has changed. The trend has shifted, and it's just persisting, and it's just moving in some secondary tide correction. That is right now moving sideways, right? So because it's not the directly tradable asset, right? It doesn't have the self-fulfilling effect. So by observing that, you're observing actual trends. Oh, it also gives you a little bit of understanding for what's going on, for instance, on the Netflix chart, right? Again, inclining 200-day trend is a very sharp, very strong indicator of the bull market. So 2022 as a whole was a bearish declining trend of the 200-day trend line. And in this case, ever since 2023 started, basically there was a ramp up and it's consistent move up and following this sequence of breakouts, right? So even though there's a little bit of some liquidity catching, some overflow top, there's basically pulling a little bit of a mean reverting move. Perhaps there are a couple more weeks, to the downside or something. Otherwise, you're really looking at the very strong, persistent move up, right? And this main narrative, this main dominant tendency is telling you that the market continues to go up despite all the challenges, right? So it is fair to expect corrections. However, the main dominant tendency is climbing up, right? Hope it makes sense. And how it all translates to Bitcoin? Well, let's have a look, shall we? Right? So looking at the Bitcoin and trying to understand, again, how the bull market kind of like just relates to the correction, or how the correction relates to the bull market, you're able to position yourself in the technical matter, knowing what's going on specifically in the traders' minds, right? So what is going on? So again, despite local corrections, despite Bitcoin just trading below $28,000, just guess what? We are moving still all the way up from all the way down from 1500s. So it's not that it kind of like keep declining, right? It's not that Bitcoin just keeps declining. It is a powerful thrust, a major breakout above all of the averages, with the bull market trend defined as the 200-day curve going up. It's all the breakouts going on in the world, right? It's all the major breakouts of the 20 breakout levels on the 2021, 2022. And it's there. It's breaking out, continues to break out consistently, right? It is a technical expression of trend and the momentum of trending environment of a strong, persistent movement in one direction. This is, ladies and gentlemen, what we call a fucking bull market, right? This is not some accident. Like, listen, if a Bitcoin goes up 100% in a matter of 2-3 months, right? Consistently, day in, day out, month in, month out. How can this be a bear market? Just use some common sense. Right? I mean, listen, let me talk you through for a little time. So I'm talking about common sense, right? Because common sense, application of common sense, very simple rules, like linear approach, like very simple understanding, right? Some people would say that the markets are coincidental, that they are random, right? That there's this random walk and 50% of chances every time something moves, that you have 50% of chance that it moves up or down. It's basically like flipping a coin, right? So the markets are not random because of existence of trends. If an asset moves for 4 months straight up, right, and it generates incredible returns out of that, there's no randomness. There's consistency. There is trend, right? So the existence of trends is exactly what negates the, market efficiency, or I should say market randomness, right? The markets are far from efficient, basically because of behavioral biases that just empower and promote the trending environments. So one way or another, this is very important to acknowledge that by watching those trends, you're looking at the real raw source of momentum, of strength, of power, of negating anything that anybody that would tell you that the markets are random. They are not random, right? And the existence of momentum is recorded as early, or goes back as early in the timeline as 213 years back, right? This is the registered, recorded existence of momentum. And in fact, it's the oldest momentum investing technique. And just some academic people would not have enough sufficient understanding to grasp the knowledge about it, right? And they would reject it because that's what people do. If something conflicts their views, they would reject that, right? This is called cognitive dissonance bias, right? So by rejecting that, they would not expose themselves to losses. They would not have to admit their faults, right? And people are ego defensive. We will do everything we can, apparently, on average, act irrationally as much as it gets, to defend our ego, to defend our picture, to defend our idealized picture of ourselves, right? It doesn't make, of course, any sense from the rational viewpoint, and it definitely doesn't make any freaking sense in finance and in money, right? Money promotes rational. Money promotes healthy common sense. So by looking at those trends, you're able to detect really that there's persistence. There is no coincidence. There is a very strong move up. And it's different than a strong move down of 2022. This is why we call that a bull market, right? And guess what? This one tiny little correction day down is not going to change. Is not going to change basically the overall tendency, right? It keeps going up. It keeps going up. Fucking hell, there are some background noises. Yeah, so American people apparently in the place right now in Miami, they have very thin walls, right? So it's interesting. Anyway, so it's a strong, persistent change, and this little tiny freaking correction, guess what? It will make you think if you focus on it too much, and just focus on this last couple of bars, last couple of days, and say, okay, keep declining. So then your brain starts visualizing and projecting, okay, the saliency that is going to continue like that forever, right? That we are done, that this bull market is ended, that bull market never existed, right? And we tend to forget after one fucking candle, we tend to forget about everything that's been going on for the past 4 months. How crazy is that? right? Think about it for a moment. So yeah, by observing, like I said, the correlation between, for instance, Bitcoin and S&P 500, right? You can tell that there is a 0.73 correlation coefficient, right? Which tells that it is a strong positive correlation. So Bitcoin will have very strong coverage in terms of the directional movements of the prices, right? So it moves in a very similar manner to S&P 500. So whatever S&P 500 does is going to be promoting for Bitcoin as well to move in the same manner. Less some local technical fluctuations, just like I said. So what does it tell us, right? If we go further, like I said, 200-day moving average, right? 200-day MA, that's it. That's the black curve. And this black curve keeps rising. It keeps continuing, and it continues to go up. It continues to go up, which tells you that, first of all, it hadn't happened until it hadn't happened, for a long time, until the bear market started, right? So the last time it happened, it was in 2021 when the bull market was on, right? That's how we can tell that this is a still bull market or a bear market. You can, in fact, turn off anything that is just right there. You can turn off. Listen, you can turn on the moving average, right? You can turn off everything else. You can even delete the prices, right? And what it tells you is that, guess what? This is the 200-day moving price of Bitcoin, right? What it tells you is that there has been this significant shift. 2022 was the bear market, right? And it's moving up consistently over the course of the past couple of months. So this is, ladies and gentlemen, a bull market. And bull market corrections, the moves that just basically go and move contrary to the main dominant trend, are short-lived, right? So see, you're looking, let me just explain a little bit. The bull market, bull market overall, from the price action point of view, from the Delphi theory point of view, is basically a set of inclining highs on a high time frame basis, right? Inclining highs and higher lows, higher highs, higher lows. Typically, when there is a lot of disparity between the highs, the swing highs and the swing lows of the following tide, this gives you a little bit of a caution that is like this behavioral driven, right? There is this not much rational that is hindsight bias kicking in, like recency bias kicking in, or regret bias kicking in because you missed out on the previous point, right? And those are all kind of eventually self-promoting. So this inclining set of highs and lows, right, is exactly what we call a bull market. And guess what? We are having that on the long-term time frame, inclining set of highs and lows. And each and every single motive wave or impulse wave, if you say so, right? Impulse wave or motive wave, if you are to apply some Elliott wave theory in practice here, is basically the main dominant thrusts that just move alongside the main trend, right? And those tiny little those countering tides are secondary. And by definition, they are doomed to fail. By definition of the bull market, they are short-lived. They have no stance of surviving, right? Because the dominant tendency is that the price keeps going up on average, right? So the short-term correction doesn't cancel the bull market, right? I mean, that's how simple it gets, right? I hope it makes sense. Touch Martin, hi. So Martin is saying Birb is probably one of the best teachers and market psychologists out there. Follow him. Thank you so much, bro. Martin is an excellent person as well. You should probably know how much of an excellent guy he is as well. Paul says, BTC looks fine. Altcoins are getting absolutely shredded. That's it. Altcoins do really well, especially when the market is bloated, when the market is full of capital, right? Which means later stages of the bull market, because if there is still so much cognitive dissonance, then it is an early stage of the bull market, right? So let me actually show you one thing. Let's go to this tweet, right? I'll just go on and real quick find it. Boom, 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 boom. Where is it? It's going to be about market cycles, right? Market cycle psychology. Where is it? Did I miss it? Yeah, there we go. right? So this is the psychology of a Bitcoin cycle, and disbelief, which is exactly where the greatest amount of cognitive dissonance happens, right? Where people continue to reject a reality because they are stuck in the old bear market frames, right? Many people are still probably short. Many people are still probably very much believing that this is a bear market, but guess what? Guess fucking what? This is not a bear market because that's what the trend tells you, right? So again, facts versus opinions. Delusional opinion is that this is a bear market only because you are short, and you're long and you keep losing, right, or something. Then it doesn't. The fact that you may lose, the fact that I lose, the fact that losses are inevitable, and it doesn't change a dime about the bull market or the bear market, right? This is illusion of control bias. So here, by looking at the trends, just looking at what's going on the left side of the fucking chart, tells you the facts. This has already happened. There is not much to argue. So I made this experiment a couple of times, right? So I asked, so that if the 200-day trend represents the bull market if it inclines, or the bear market if it declines, and it inclines, so is this okay to say that the main dominant trend explaining the bull market goes up, then this is a bull market? Can I say that, right? And in replies, I got many people saying, yeah, but whatever. Oh, but doesn't matter. Oh, yeah, but we are in the bear market. Yeah, but how about $50,000, right? Or how about breaking the all-time highs? Or countless fucking reasons that make no sense, right? So those are all projections. Those are all what's happening in here. And guess what? You have no idea what is going on up here. I have no idea if I fucking wake up tomorrow, right? Or even if another emergency alert rings in Florida, I might just die of a heart attack. I don't know, bro. Like we don't know what's going on the right hand side of the chart. We have no tools to know what's going to happen in the future. We have no right to know what is going on. And technical analysis is not about knowing what's happening in the future. You only are to know and understand and put it in the right context what's going on the left hand side. And guess what? Same with the weather. We don't know what's going to happen in the weather-wise in this summer. But guess what? If for the past 300 or 2,000 years, the temperature was positive in summer, then rejecting the technical analysis, would be same as, like I said, expecting all those trends to reverse, that none of that matters, that none of those 2,000 years of positive temperatures matters in the summer. And guess what? I'm going to fucking bet on negative temperatures, and that I'm going to bet this summer, right? That I'm going to freeze this summer. That's what you're betting on. If you ignore the analysis that is technical, that is violating all the rules of the momentum that is existing of many recorded years, right? Hundreds of years, that is looking at it, that this trends tend to persist, that it continue to move eventually, right? Because there's this force, because there's this impetus. Then if you reject that say, okay, price has no memory. We don't know what's going to happen in the future. Guess what? We have no idea what's going to happen in the future. Same way we don't know what the next prices are going to be. Same way we don't know what the weather is going to be in the summer. However, if you had 2,000 years saying that the summers are 30 degrees Celsius or 100 Fahrenheit, whatever, right? Then how sure can you be of the bet that is trading counter that, right? What are the odds that for the past 2,000 years, the positive temperatures happen during the summer? What are your odds that if you bet on the freezing temperature this summer, you're going to be right? Well, arguably 1 to 2,000, right? This is a small number. This is a very, very, very small number. Think about that, right? So again, focus on the facts. We don't focus on the opinions, we focus on the facts. I don't care what I'm thinking about the market. I don't know what's going to happen. I don't care if I'm bullish or bearish. I follow the trends, and the trend is bullish. This is a bull market, right? And no, not a single correction can change that. And this is real, right? Where's that? This is real. If somebody looks, and that's what I was referring to, right? If somebody looks at this trend line, right, at this 200-day trend line representing the bull market or the bear market, and they tell you that this is not a bull market, guess what? They are rejecting the reality, because most likely they are cut short. They are basically losing. They cannot trade. They cannot understand what's going on, at all. or they are caught red-handed in the thinking and stuck in the old bear market frames when the market was declining, right? So by rejecting the bull market, you're basically telling me, see, like somebody tells me that this is not a bull market, then according to them, this line is declining. And I'm so sorry. Perhaps I'm silly and perhaps I'm stupid. However, there is no way I can see, unless I'm upside, turn the chart upside down, that the curve is decreasing. Right? I hope it makes sense. I mean, this is, ladies and gentlemen, a little bit of common sense that I'm trying to pour in here. That is going to be valuable because rejecting the reality, being in this delusional bubble of disbelief, of this cognitive dissonance, and being afraid to admit, okay, I fucked up, I shorted this rally, I was wrong, I lost money, right? This is not letting you eventually go through all the phases of the grief cycle, like disbelief, anger, depression, and eventually you have to reach acceptance. You have to accept, okay, I fucked up. I'm in this situation. I'm in this mood. I'm in this position where I lost a lot of money. What is going on next, right? What is up next? So until that happens, people are stuck in disbelief. And guess what? If they are stuck in disbelief, they're like this small, from the market viewpoint, they're like the small plankton that whales are eating as liquidity as their food, right? They would just suck it in, basically in their own guts, right? Because that's it, right? They will suck in all the plankton out of the sea because they were hungry, because they have this drive, because they know, okay, that this is the basically right way to do or something, whatever. I'm deviating. So that's what I mean, right? So thinking in those old bear market terms, as in this is a sucker's rally, or this rally will fail like the others. This is assuming about the future, about which we have no idea. And instead, this rejects the reality, because if the bull market trend line is inclining, right, then rejecting the reality that it is inclining basically makes you act and make all those kind of shitty mistakes that just expose you to losses. And guess what? If you expose yourself to losses, you're going to have less money. So this is the cost of rejecting the reality. The sooner you accept that this is a bull market, not because I say so, but because the market trend tells you that. This is not me. This is not my opinion. This is literally what the market is telling me, right? The market is telling me, hey, this curve is going up, right? So how dumb it would be for me to say, nah, fuck it, you're wrong. This chart is wrong, right? This curve is going down. So common sense, ladies and gentlemen, common sense. So, right, that is, this is the reality, right? So the correction, the long story short, correction is pretty much irrelevant. It's supposed to it's supposed to trick you into thinking that everything is ended, it's done, right? And it doesn't matter. It doesn't matter, bro. So here's the Burbicator Pro, right? Burbicator Pro is an excellent tool that I use. Is my private trading system is the one that actually makes me all the money. Is the one that trade. It's like 600K on the 3-4 month, whatever. It's good because it's tested, it's back tested, it's reliable, it's working, it's robust, it's credible, it's based on sound premise, right? On existence of trends, breakouts. It includes the volatility filters. This is one of those, right? Because the foundations of the Burbicator Pro is not just an indicator that I can get outside. It's a well-tested, designed over the past years with incredible people. Tool that is a system generator, right? So it's not an indicator, it's a system generator. So by combining many different custom indicators that are not popular anywhere else, that you cannot get them anywhere else, right? You cannot find them on TradingView, on anywhere, because they only exist within Burbicator Pro, right? So this is the base. This is the whole base, right? There are components custom components that are based on the proprietary intraday trend algos, standard deviations and price deviations in percentages, right? So they have factors similar to Bollinger Bands, however, they are not Bollinger Bands, Fibonacci levels and trends. So Fibonacci existence is used, anchored view up, volume weighted average prices, ATR, which is the volatility filter, momentum indicators, right, for short-term and medium-term trading, adaptive ATR price trailing functions that are coded especially for that, price oscillators, RSI, MFI, MACD, and all that, automated support and resistance. So you can have as many combinations as you want, right? One third with the second, second with the fifth, countless indications, many different ways that you can use that. However, what is the most relevant is that it works, right? It is adaptive, it works, and that's because I use that, right? That's because I use that. So so hang on. Let me turn on, for instance, this 200-day trade, 200-day baseline, right? So we're on the daily chart. Let me turn off. This is high time frame trailer based on the 3 ATR filter, right? What matters here for you is that if we turn on, let's say, the 200-day baseline, right, which is this main moving adaptive hybrid moving average, it basically is going to tell you where the potential support is, right? Because this is adaptive. This works very well and much better than that the 200-day moving average. It lags much less. Let me show you, right? It lags much less, and because of that, you can react faster. And reacting faster to the changes is basically what makes you money, right? So according to the baseline, the breakout was in the early stage of the January, right? And later it happened on the 200-day moving average. However, the adaptive average started inclining already, right? So this was an immediate detection of the bull market, and the detection of the bull market for the regular averages only happened in March, right? Because this is where the moving average started inclining. So this January from March is your opportunity cost, basically from 16,000 all the way to, I don't know, even 25,000, right? So this is the whole move that you've missed, basically by not using Bpro, right? So so much money could have been made with that. I'm happy because I made it, right? And I'm in this spot where I'm just happy to teach you about it, right? I don't need money. The money doesn't make me happy. I have it, but it's just there. It would make much more. It would make me much happier if more people, more traders used and applied common sense and a little bit of understanding of behavioral science, technical science, to understand that, because many traders will refer to the moving averages, just like this 200-day curve, right, or the 200-day baseline, Bpro baseline. Then by watching that, this may turn self-fulfilling, because that becomes their frame of reference, their anchor, and the prices often gravitate towards those anchors, right? Which is exactly what Jay Powell said on one of the testimonials, right? Where he said that they set 2% inflation rate because that's what people will follow. And because people will follow, because they will anchor at this level, the economy will eventually idealize the 2% inflation rate, right? So it is real. Our mind anchor can make it happen, and it does make it happen. So because of that, there is a chance that if, in fact, even if this correction is going to just continue to climb, which is a little bit uncertain, I wouldn't necessarily bet on that. That is just going to be very deep, because the bull market stages are typically, especially the early stage of the bull market, are very fast moving, are very fast at pacing, because there's an opportunity, right? And guess what? If you're afraid to buy here, there are going to be whales with billions of dollars who are not going to be afraid, and they'll just buy in because there's a huge opportunity, right? And because of that, the price will continue to climb. The price will continue to move higher, and causing much more cognitive dissonance and counter trading and regret bias, missing out all of those rallies, fear of missing out, FOMO, and so on, so that you eventually buy on the top, right? So instead of doing that, you can accept the reality that it's a bull market, changing whatever views of yours, and you can just position yourself in the direction of it, right? And even short-term corrections, even if we get towards like $25,000, which is a nice spot, that there's a confluential area of the previous swing highs that, based on the polarity change principle, should turn into support right now. All right, there is this nice anchor around $25,000. Besides, it's a round number. We love those round numbers because those are easy to remember. We are easy to memorize them, right? Because of that, they work really better than support, for instance, at 176.89, right? We don't, like, I don't even remember what I said already. So you have to remember and understand that those round numbers often are psychological kind of like triggers to anchor people's minds in there. And if enough traders anchor their minds, the prices will gravitate there, right? So there is this risk, there is this chance that you probably may want to be factored in. I mean, I'm already cashed out publicly. However, you know, you might be aware that there's this chance that Bitcoin just moves down to $25,000. And guess what? Even if it does so, the trend is going up. It's still a bull market, and the opportunity is there, right? Because if the prices get discounted so nicely in the bull market, guess what? I mean, I will add even more to my long-term bets, right? Because that's what you do. You detect the opportunity. And instead of applying the fear, instead of focusing on the loss aversion, okay, like, I'm afraid to make a bad move, I'm afraid to lose, I'm afraid, whatever. Just focus on the fact side, just focus on the opportunity, because missing out on the move is a cost as much as losing. Missing out and losing opportunity, right? This is your opportunity cost. This is your opportunity cost. And the opportunity cost of 50% move on a $1 billion portfolio is basically 500 million. So can you afford to lose that? Right? So that's the point. So, ended up on it, of course, applies, works really well with the with Ethereum. So it's the same 200-day moving average adaptive. It's telling you that, there's been a little bit of a tweak, a little bit of an overcrowd pattern. There was this this nice frame of resistance, up there, $2,000, that was basically, thrown over and then hiding back, which basically makes it a failed pattern. So the failed breakouts, tend to perform better in the opposite direction than anticipated initially, right? Because basically people who got short here, they'll have to, who got long here, they're going to have to admit the losses, right? And because we most likely hold on to the losses, we are irrational as traders. We hold on to the losses and cut winners early, which is completely the opposite that we should do, right? Many traders would basically say, okay, I'm not going to admit the losses because the market is going to bounce back. Like, we have no idea what's going to happen in the future. I only know that I'm losing, right? So your job as a trader is to minimize the losses and expose yourself to winners, and not the other way around, right? If you're trading the other way around, guess what? You're going to end up being poor, right? So I don't know what your goal is, what one's goal is, right? However, if one aims at targeting high money, well, that's not the way to do it, is it? Right. So because of that, again, there is a nice confluential area for Ethereum around 1700, right? Nice round numbers, but right. So all those things concerned, I'm just telling you that even though there are corrections, they are short-lived. They are supposed to fail because the main dominant tendency is to go up, right? This is bull markets, ladies and gentlemen, and rejecting that may cost you hundreds of thousands of dollars. Good question. What is your opinion, Salome, and walk away? So one last thing before I go. I love this question. Thanks for that question. Let me show you, right? So the tool I use is SeasonX. So SeasonX is the seasonality pattern tracking tool, and you can pick, the whole history of Bitcoin. For instance, this is a Bitcoin USD chart, right? It is a composite, kind of like an annual seasonality curve, right? Let me just turn on different font here, color. So what it does is that it aggregates 12 years of data, and you can tell that there is this overall inclining tendency April through May, right? So as early as May on the past 12 average, right? So it's not just last 5 days, it's not just some random data, it's the pattern that develops over 12 years, right? Ever since Bitcoin started trading. So again, same with weather. If you know that the temperature in April is, imagine, 95 Fahrenheit, and I don't know, temperature, just imagine, in the peak of June or something is 20, 125, whatever, right? In some place in the world. And this has been maintained over the course of the past 12 years. So what are the odds, right, that you're going to be right betting on negative side of that? Obviously low, right? So what it tells you is the average return by month is basically the best in April, right? So 20% average return is a strong seasonal pattern. The greatest buying opportunities typically happen with average return by weekday. In Monday, the worst ones on Sundays, right? Wednesday is fine. Otherwise, April and May are those sweet spot, right? It's this sweet spot, accounting also for the seasonality of the presidential cycles, right? So the 4-year presidential cycles, we happen to have a pre-election year this year. And over the past 84 years, only one time the pre-election year lost. So we have 98.8% chances that this year is bullish. This year is bull market. Bullish means closing higher than it opened. This is what defines a bull market, okay? So you have 98.8% of statistical chances over the course of past 84 years, not just the past 5 days. It's not random data. It's 84 years. It's twice or 3 times as long as you live, right? That by betting on the bull market this year, right, on the bull market context, you win. We don't know what's going to happen in the future. However, you have good chances that it's going to repeat, right? And April and May are so-called sweet spot of that, right? This is typically what ends this so-called sweet spot from end of Q4 of the preceding bear market year through Q2, which ends basically in June, right? So sell in May and go away is this wise pattern that you can see. This reflected because ever since June starts, it basically keeps declining to reach the peak, the trough, the value minimum in September, right? So July, August, and September, so-called Q3, is not really a good period on average, right? Because it is nothing but losses. Guess what? Traders are taking time off. They're going on vacations. They're enjoying time off. Somewhere in the gardens because the weather is nice. Very few people trade, which is why most of the time the Q3 is boring, is sideways, is losing even. And this is not a good time to be exposed to longs, right? So because of that, the sell and main go away pattern is real, right? And even though perhaps it's not the time clock, like clockwise, how do you call that? Like it's not 100% ideal pattern. You may have a day slippage and day slippage one way or another, whatever. It may be third week of June, and maybe first week of June, and maybe June 1st that it starts declining. You never know, right? However, there is a strong chance that sell in May and go away is going to be maintained as well this year, right? I hope it makes sense. Listen, and so Bern is saying, baby bull Jesus has not been found yet. Ask Chart Vamp. I remember this guy. I mean, we talked the other day, like years ago. I hope he's doing all right. So, see, that's what I'm saying, right? I have obviously, again, I have no idea what he's saying, so I'm not referring to, he's saying specifically. I'm just saying that our opinions are irrelevant, whether you call it baby Jesus or I'm a Christian, I'm Catholic, right? So I like the name. Now, whether we call that baby bull Jesus, whether we call that 50 black crows gang pattern, whether we call that a snake triangular pattern, whatever, bro, doesn't matter. And guess what? I mean, market can pump with our allowance. Market can pump regardless of what we name something that we're looking for. I'm just telling you that by looking at trends, at facts, not opinions, not whatever I name, just looking at those facts, this is a fact. This line is inclining. This is a bull market. And doesn't matter if you find snake pattern or if we find a blind bat pattern, right? Or a 50 dancing queen pattern. I don't know, bro. It doesn't matter, right? So obviously, eventually you may get to find some sort of different patterns, whatever you name them. However, I'm just telling that this is a bull market, and this is not my opinion. The line is moving, and if the line is moving, this is a bull market by definition. So there's not much room to argue there, right? I appreciate the okay. It's a joke from the past, as you were one of 6 streams, 4 or 5. Man, you have a good memory, Bernd. I mean, it was literally like so long ago that I lost the memory. I lost the count already. Have memory of a squirrel, right? I'm just a silly bald guy. Rambling a lot. Listen, and speaking of rambling, we'll have to close it. Thank you for those great questions, everybody. Braveheart just joined the stream. You're finished. We'll watch rerun when done. Please do, please do. Gold. Okay, let me show you gold real quick, right? I'm a big proponent of gold. I'm a big fan in gold market. Obviously, the CRB index, which is a commodity research bureau, it's been in a nice run over the course of the past couple of months. And what matters the most is that it's driven definitely by precious metals and the energy, right? So observing the price of gold, which is right now, again, just based on a matter of trends, right? It's holding the medium term, the short term trend, right? And all the trend lines are inclining. This is a bull market again for gold, right? Maybe a little bit less steeper. However, it's a bull market, right? The 200-day curve moves up. The medium term trend is up. The short term trend is up and holding the support of $2,000 per ounce, right? So I like it. Silver is a little bit of a smaller brother of gold, so it also trades well. It even trades better, right? Because it's already hit not the all-time highs, obviously. However, it's already hit this relative swing, right? Which for gold will mean all-time highs in this case. So soon. So the metals are good. I like metals. I have metals. Love them. Appreciate the question. Good stuff. Good stuff. Yeah. So last final thing, right? I was talking about how incredible value can Barbecued Pro give you. I was talking through all the evidence, all the proof that is just there shared with like I said, with confirmation, with orders, with screenshots, with everything. You can go ahead and find it, right? And you can also get free signals, right? So some of those entries are shared basically in our calls only channel. On this calls only channel, and there are plenty of signals every day. Some of them are automated to just pop in like crazy. Beautiful stuff. You can get them for free if you go ahead and click on the link. There's this, like my pinned tweet, right? If you go ahead and click on the comment in the tweet, there's this link called COBB, thebourbonist.com/COBB. All right. So if you go to thebourbonist.com/COBB, this gives you a chance to participate in our special deal with our partners, with Bybit, right? They're an excellent exchange that we're partnered and affiliated with. And basically that if you deposit $100, they can get you 3 signals access for a month, right? If you deposit more, they can get you even for a year, basically saving you even $1,500 a year, right? So you're not paying $1,500 for a year. You're giving yourself a chance to make all the money in the world, right? And it comes free. It's pretty cool if you ask me, right? So the only thing you have to do is just follow the steps in here under thebourbonist.com/COBB, right? And it's yours. Activate it. It's yours. You're going to enjoy that. Go ahead, give yourself a chance to change your life. It costs you $0. Pretty good deal if you ask me. Thanks for watching. God bless you all. All the best love. Enjoy your day out. Straight greetings from Miami. It was CryptoBirb Agent talking to you. God bless you. Bye-bye.